Goldfields, one of the big South African mining companies, posted a 19% fall in third quarter earnings, citing illegal strikes at its South African mines eating into the profit. The miner reported adjusted earnings of 202 cents per share compared to 250 cents in the previous quarter. Now joining us for a look at the numbers is the Chief Executive, Nick Holland of Goldfields, and with him will be Vic Govender he's a senior analyst at Vernani Private Clients, and Brandon Sachs, trader at Avior Research. Nick, let's get you to kick off with your company. Just to give a couple of the numbers there for context, you talk about net earnings for the quarter, 1.42 million rand. That's down from 1.6 million rand in June and down from 2 million rand for the previous comparable quarter. And then in terms of production, 35,000 ounces lost because of that strike. Perhaps the most difficult quarter, certainly, of your tenure as CEO and perhaps ever.
Well, the fact that we had a fire at the end of last quarter, which knocked out one of the highest grade shafts at KDC West for the whole quarter, obviously was not a good start. The strikes as well. But I think we have to look at the positives from this. First of all, the gold industry stuck together. We didn't concede on any wage demands. All we did is bring forward pre-existing commitments from the 2011 wage deal, which cost us about 2.5% increase in wages in those bargaining units. We had nobody really injured during the strike. We had no property damage. So coming out of a very difficult situation, we have to look at the positives, and I'm grateful that we managed to get through with that. Obviously, no one's happy with the outcome. We lost 1.9 billion rand of revenue during that particular period. The workers lost all of their bonuses, they lost their wages, etc. So I think no one really wants to have a repeat of this anytime soon, I think. And the trick now is, when the dust has settled, is what do we learn from it? And what would we do differently, all of us? And that's going to be a key focus for 2013. But the other big positive we shouldn't forget is we also concluded a new operating model agreement for South Deep that now puts South Deep on the same footing as all underground mechanized mines, 24 hours a day, 7 days a week. And for a mine like that will be mined for the next 60, 70 years, it's a great breakthrough, so I'm very pleased with that particular outcome as well.
Of course, Nick, while it's been a steep learning curve, this past quarter in terms of how to diplomatically deal with the labour situation here in South Africa, I mean, there's a lot of nervousness around the fact that this isn't a closed chapter that we're looking at. I mean, we had the National Mining Industry Group on Friday just warning that the mines sector could see job losses that could trigger further violence down the line. Just how nervous are you about the road ahead in South Africa specifically?
Look, what's clear is that if we continue on the same trajectory as the last 5 years, in other words, around a 5 to 7% per annum decline in production, with costs going up between 10 and 15% per annum, anyone can work out that that trajectory is not sustainable for the industry. Thank heavens we got the Rand gold price where it is today, otherwise this whole issue would have happened earlier. We have to change the way we run these operations. I tried 4 years ago to move to a 6-day working week with very limited success. I think we've got one shaft in Goldfields that's doing it. We have to get that on the table again. We're losing a whole month of production because of the off Saturdays we don't work. All of our mines across the world work continuous operations. And in fact, that's the other positive, is in this quarter, all the international operations performed above or at expectation.
I was just saying to Viv a moment ago that if you look at the other numbers, we are particularly interested in South African issues, but the numbers look pretty good, Viv.
Yeah, that's the kind of worrying part of it, actually. From a South African point of view, is if your competitors are not given the same kind of problems you're having locally, what does it mean for investment? Right now, what is your investment focus? Are you actually, I mean, you're pretty much 50-50 split with South Africa versus the rest of the world. But is your new production, your new investments, what is that kind of split at the moment?
Look, all of our new investments are going to be most probably outside. We do have a project to retreat all the tails across our operations, and we've concluded a joint venture with Gold One to do that. That's an interesting project. South Deep, of course, we still got about $500 million to spend to get that to full production. But I've said before that our long-term strategy is to reduce our exposure to South Africa. We want to get down to 40%. When I got into the job 4 years ago, we were at 68%. Now we're at 48%, and we're going to go down further, but more through diversifying outside as opposed to just dropping the production here. And South Africa will always be the bedrock of Goldfields, but I think the exposure is too high. We wouldn't want to be 48% anywhere in the world. That's too big an exposure. So we want to get a nice balance going forward. I think we can deal with some of these issues within that context.
Brendan?
Just two questions quickly. With the shortfalls we're going to see from the tax revenue, or loss in the tax revenues in the mining sector, what does Praveen Gordhan do now to make up for those shortfalls?
Look, obviously, I'm not privy to all of his particular issues, but there's no doubt that this strike has cost the country dear. Having said that, if we can get back to full production, which we're just about at now, at these sort of rand gold prices, the tax formula is actually geared to pay more taxes at higher prices in the gold industry, and we can make it up. And that's the one thing you find, is if you get back to steady state, we have a good run, we have good prices, there's money back in the coffers. One thing's for sure, the gold industry can't afford to take significant increases in taxes. And I've said before that I'm not in favour of the carbon tax. I don't think the industry can afford it, particularly after we've had royalties imposed on the industry. And I hope that sanity will prevail, and if we can have a reasonably certain future in terms of the rules of the game, it also helps to encourage investors to come back in. Because right now we've seen a lot of investors move out of South African mining stocks, and we need to work out how we can get them back.
They'll move back pretty quickly if they feel that there's some certainty. You spoke out quite strongly during that strike. You said a line has to be drawn. So first part of the question is, what are you going to do differently? What might the industry do differently? And secondly, what is the industry going to do differently to get government to give some clarity?
We continue to meet with government through various forums, the Chamber of Mines, various other platforms that we use, and continue to make the key messages to them about the sustainability of the industry. I believe that there's a much better understanding now between us as to what we need to do going forward, and we just got to keep the dialogue going and find each other. We cannot afford not to find each other. In terms of the strike itself, holding the line was very, very important, and if we hadn't done that, I think you'd find that 2013 would be a very, very difficult year. But what are we going to do differently? We have to engage and listen to the workforce more as a company. And in the past, I think we've used organised labour structures to do that all too often. And we're going to be using our own direct communication methods to find out what their problems are, what we want to achieve. And I think that's going to be a good platform to improve this industry. I believe strongly in that.
But while these conversations are happening, and while we see geographic diversification being brought to the table, specifically from goldfields, I mean, we still find it hard to find those who are investing in the gold mining space right now, as opposed to the physical metal. What's your stance on the gold mining sector and investing, the investment case it's putting on the table?
So the issue that I have with gold at the moment is that I think the upside is capped in terms of, let's just say we have an incredible blowout, we see $8,000 an ounce. Do you really believe that government will not step in and impose some kind of super tax on those really large increases in terms of the gold price? If you want to, basically a lot of gold bulls are betting on a blowout gold price. And that's one of the questions I wanted to ask you, what your forecast for the gold price is. I think that's one of the things most investors out there think about at the moment. But should we have a blowout gold price? Don't you think that there is an upward cap on it because of some of the other stakeholders, be it labour, be it government, which is going to step in and ask for a bigger share of that?
There's always the risk of super taxes, and 25 countries across the world either have or are in the process of looking at their tax regime. But the one key message that's coming through that they need to look at carefully is that despite the fact that the gold price has gone up 3 or 4 times over the last 8 years, primary gold production has basically flatlined. It hasn't done anything. We've had a compound annual growth of about 1% over 10 years. Now, classic supply and demand fundamentals would dictate we should have seen higher production. But what are you reading in your newspapers today? Projects are all being pulled back. When we're seeing prices of $1,750, who would have thought that a price that's beyond our wildest dreams 5 years ago is resulting in us not doing projects? And I think it's the culmination of all of these particular issues. And if the project fundamentals don't work, the project won't go. And when you see a lot of projects not being built, I think we'll end up getting a more reasonable position being tabled. I think everyone needs to benefit from gold mining. The question is, the spoils need to be shared in a way that gives incentives for investors to do those projects.